This is Mr. S.M. Bangur, Managing Director of Shree Cement joins us. Now, Mr. Bangur, good morning. Thank you for joining us. I want to first start with your understanding on this scenario. We'll get into specifics of Shree Cement, but the area which you represent, largely north and parts of central India, is demand better? Is demand significantly better, or demand is still thanda?
Demand is little better, not significantly better, not thanda. Now, cement demand sporadically can go up or down, but overall it will go now. If the GDP is up by 7%, the demand will go up by 6 to 8%, something like this. It is a very good correlation with GDP. So, nothing unusual. 3-year GDP growth and 3-year demand growth will be almost equal.
Do you think the demand will remain firm and there is a genuine uptick which is coming back both in industrial and consumption, or the monsoon could have a deterrent?
Small time monsoon comes every year. So when we say demand, you have to compare August to August, September to September. So monsoon factor is not important. Monsoon will be important if you compare April, June to July, September. But that is not comparable. Secondly, the future of cement demand is totally dependent on how the GDP grows. And I am really confident that GDP will be growing by 7 to 7.5%. So cement demand will be growing at the almost the same range, 1% up or down.
Okay, so that's the take on demand. What about pricing as well, Mr. Bangur? There has been some indications from the regulator on that front, given the recent spike in prices, that they're not exactly happy with it. And you've also said that you're going to be focusing on pricing going forward. Just talk to us about the kind of trends that you foresee, and also specifically for Shree Cement, what the agenda is.
Pricing year after year, if we see the average price rise of the year, it will be 3 to 3.5%, much lower than the inflation. This has been the trend of price rise for last many years and now also. When yearly price rise is 3%, sometimes it is negative, sometimes it goes up 10%, but overall year to year if we see, it will be 3% or so. This has been the trend for last 10 years. Only when the price rise is there, we talk about it. But when the price fall is there, we keep all the news agencies and everybody keeps quiet. But overall, cement price in the year will not be going up more than 3 to 4% maximum compared to last year. So this has been a trend for so many years and it will continue.
Really, ahead of election, Mr. Bangur, cement demand always goes down. So I'm not surprised that April and May, at least some parts of India, the contraction has been there. Do you think demand will come back? And which parts of India you think the demand elasticity is still the highest? Because if I look at the total all India capacity, there is still more capacity and less demand. How do you see things panning out?
Always there will be a shortage of labor at the time of election. So temporarily the demand comes down, but it will go up, and the demand will be, as I have said repeatedly, is dependent totally on GDP growth, because when GDP grows, everything is needed. Company has the need along with its capacity to pay, and when both matches, then only the demand comes. And as far as their capacity and production, in any commodity, capacity will be much higher than the production. Indian cement industry is capable of meeting the need of the country, and they have created the demand. They have created the capacity always a little earlier than the demand comes. We are at least 3 years ahead, and our present capacity can serve 2 years later demand, whatever is the 15% growth or so, that can be served easily. There will not be any shortage of cement in the country.
I also wanted to understand, Mr. Bangur, the status on your new plant at South India and what kind of capacities is it running at?
I have just put a new plant in South India. We are starting there with the right price, and it is running at a very low capacity at present, and it is we are making our brand there, and significant capacity will be coming by the end of the year. For the first 6 months, we have run with a very low capacity. It is continuously increasing, and depending on the market scenario, which I suppose will definitely go up, our capacity utilization will become far better.
You know, our viewers have always appreciated, Mr. Bangur, the fact that you are one of the most cost effective cement company in the world now. You've always innovated with waste management, with pet coke. So what is the new innovation which is coming from Shree Cement? And also part 2 of my question is that where exactly are your cement realization right now?
Focus is on giving the better quality to the market. Now Indian market has become mature and can absorb better quality. So our focus is that between us and the highest selling brands, the difference should come down. We are working on it. So for the time being, our focus will be to maintain the cost and improve the quality. Cost cutting game is now no more there. We are trying to improve the quality, and that will be our focus. And when we improve the quality, naturally the brand has to go up, the marketing price has to go up. So we are increasing our prices in all markets.
Mr. Bangur, I have 2 quick questions on the business in specific. A, about whether or not you're facing any clinker shortage, and B, how is your Middle Eastern market actually gearing up, and are you seeing any revival or any pickup in the Middle Eastern region?
First question about the shortage of clinker in North India. We don't feel any clinker shortage. Enough clinker is there with us, and we should be able to meet the total north demand, whatever it comes. The second question about Middle East. Middle East market is slow, but fortunately, our plant is there just on the port, and whole world is market for us, as shipping facility is very good, and we are exporting and getting our revenue from in Middle East more than 75% by exports. So the Middle East slowdown is hardly affecting us.
You are moving more towards branded segment. I would imagine that you are targeting largely small builders and home builders. If that is the underlying thought, then considering where real estate prices are moving and the HFC segment is under pressure, don't you think this could be a dangerous strategy?
This is a very long-term strategy, not a very small time. So in 10 years or so, we expect that Indian market will revive, and when we are moving towards that, it will take us some time. The brand building, the confidence in the market comes very slowly, and we are moving in the right direction. We have introduced new brands, 2 new brands of premium brands, and the response is good.
Mr. Bangur, a couple of other questions. The plant that you've set up in the south, the new one that you were just talking about, could you share with us in dollars the EV per ton that you're looking at from that plant? And secondly, going forward as well, if you could share with us your your DCF, your debt cash flow, and what that's looking like as well.
Ours is a debt-free company. There is no debt in the company. So the whole question of discounted cash flow and DCS is not very meaningful for us. Secondly, we will like to put the plant, not will like to, about $80 to $100 somewhere in between the new plant is being put. And that is what is there. And cash flow will come very gradually. You have to keep the plant running, bear some losses for first year or second year. It has to be supported by other operations. Once the manufacturing matures, the market matures, then also small profits start trickling in, and maybe after 3 years it will mature fully.
On a daily basis, so I want to make the most of it. The way markets look at a cement company, and I'm purely talking about analysts here, they look at the enterprise value. You don't have a debt, but what is the enterprise value or EV per ton you would ascribe to new capacity like Shree Cement if it has to get created? That's part A of my question. And part B of my question is that in next 12 to 18 months, what will be your total installed capacity and what will be the capacity utilization there?
First part, I am the least entitled to say about it. It is the analyst's words. So they have to think what capacity and what value and what other things. They have very complex metrics. We are there on manufacturing. We know manufacturing and we do the right thing. Markets value us. We don't value ourselves. And as far as this is there, in 2 years' time, we will be around 50 million tons.
Just missed the last part, sir. What we want to hear from you is that what will be your total installed capacity, and on an aggregate basis, where do you see your utilization rate settling for the entire capacity?
Our total capacity is around 45 million ton now, and in 2 years' time it will be 50 million tons. And we will be running at 70% or so.
Risk to your business. Where do you think the biggest challenge lies for the cement sector and for Shree Cement?
Cement sector is totally dependent on the major economic growth of the country, which I am very confident. So there won't be much problem as far as the cement is concerned. Secondly, the public is having money. They want to, there is enough need of cement in India. Now with the growth in per capita income, the need is being converted into demand as money is available. So I don't think any major problem is there. And Indian cement prices are low compared to world prices. Most of the places the prices are high, as the turnover to capital ratio is very low. So our turnover will be around 30% of the capital cost. So all the money has to come from that 30% turnover to service the capital.
You know, before we wrap, I just want our viewers to just, understand that what the stock movement has been. And in last 10 years, Mr. Bangur, I'm sure you're aware of it, the stock is up nearly 9x. I'm sure that must be making you happy, sir. 10 years, 9x stock performance. I'm not telling you to comment on the stock, but as a promoter, I'm sure it's a satisfactory moment, isn't it?
Of course it is. And I am very happy that the market and shareholders value and have faith in the company. We are performing and we will be performing as we were performing before. Nothing special has to be done. Some fiscal deficit, discipline, and lot of innovation which has to be done on a daily basis.
Bangur, really appreciate your time, and I'm so glad you could join us on ET Now, and certainly hope to see much more of you going forward.
Thank you.
Okay, well, I mean, cement stock up 9 times in last 10 years. Look at ACC in that same time frame, or for that matter, look at India Cement in that same time frame, or even Dalmia Cement. They are nowhere close to the kind of return what Shree Cement has given. On all parameter, there you go. I mean, Shree Cement in last 10 years is down. Hello. India Cement in last 10 years is down by 14%. ACC in last 10 years has given you a return of 83%. 83%, it's 83%. And then Ultratech Cement is 3x. But in the same time, Shree Cement is up nearly 9 times. It's not a large cement company, but in terms of profitability, in terms of capacity, in terms of margins, and in terms of cost, they're one of the best in the industry. Now, it's just one of those 5-digit stocks where the Kartikas and the global fund managers, they're really bought into it. I don't know whether this performance will be repeated or not, but imagine within a sector also which is considered to be a commodity sector, what a variation. What a variation.